Hello, everyone. We'll give it another 2 or 3 minutes. Before I start, I just want to give a quick introduction to why we're doing this and how we're gonna make it better. So we started the weekly webinar early this month. So this is our second one. And as time goes on, I think there will be more and more people coming. I believe we kind of made a mistake of having people register for each webinar. So going forward, we are going to ask people to register for one, and they can attend the rest of them. And so it will be on their calendar. And that way we can keep the engagement high and we can keep the attendance high. I think everything starts small. So right now we have about I'm expecting about 5 to 10 people, but then in the future, as more and more people are added to the webinar series, I think it will be very fun. The purpose of this is so then the question is like, why do I do it? I still do a lot of casual portal demos, and our GPs ask us the same questions. Either emerging GPs or very experienced GPs ask us the very same questions. So I thought that if I could just combine them and do a one-to-many conversation, it's already worth my time. And I'm able to talk with multiple people, and they can give me feedback, and I can also just collaborate. So it's already, so I 5 people is already really good, because the worst is one-on-one, right? One-on-one, you don't get as much information, and I'm already spreading the information to 5 people. And in the future, when we are going to change the webinar to just register once, attend the rest, it's going to increase the level of attendance. And as always, you can put your information in the chat. You can meet your fellow general partners, and then maybe you can partner with them in the future. That will be great. I do so we're gonna do it once a week. You're gonna have a lot of dense information come your way about underwriting, about fund admin, about equity raising, about how to talk to LPs and how to increase the amount of money that you can raise. All of that is good. And my goal is to get to a weekly attendance about 20 people by end of this year. So stay tuned there. Right. With that being said, I definitely want to make this super interactive. So feel free to put your contact or questions in the chat room. We wanted to basically do this and record it, and then we're gonna put it on YouTube so that more people can share it as well. Okay, cool. So make it super interactive. So right now I'm going to share my screen, and so all of you can see it. And then there might be a few more people that will come in. All right, cool. So this call we'll be talking about underwriting, and so like what made up a underwriting, and how do you underwrite a multifamily asset or Airbnb or industrial or RV parks. We have seen a lot of customers that come in trying to underwrite different asset types, and so I'm gonna go over some of the pros and cons on the traditional way of underwriting. So let's talk about underwriting. All right. You can put it in the chat room on whether you are currently underwriting multifamily deals, or if you want to underwrite multifamily deals. Go ahead and you can put it in the chat room. And okay. All right. So some of the problems I'm seeing on the underwriting world. So underwriting is basically doing a financial modeling before you purchase a property. It is to everyone does underwriting, just to be clear. There is the general partner that's doing the underwriting to see if they should buy this deal. And there is the banks that's doing the underwriting, and their hypothesis is like, if I'm going to lend you $10 million at a 7% interest rate, I better protect my downside. So they are not looking to see how much they can make. They are looking to see the risk. Whereas the general partner that's buying it is trying to see the upside. The LP might also underwrite to see like, oh, what are the chances that I might lose all my money? Okay. And then the real estate brokers, the sellers, are also underwriting it to just jack up the rents as much as they can. So they say, oh, this is such a good price, you should buy it. So everyone underwrites, but underwrites with a different motivation. And so with all of them, we are more focused right now on the buyer, which is you trying to buy a asset. Okay. So what are some of the problems if you're the buyer? Well, first of all, each underwriting takes about 30 minutes of tedious work, just putting in the rent roads and then putting in the T12, putting the expense, what's the electricity, what's the water bill, da da da. And then you, at the end of it, you get some number and then you spend about 5 minutes of insights. That's not cool. That's not, we live in the 21st century. You shouldn't be doing that. And that's what most people do. Also, a lot of the GPs are emerging general partners and they do these underwritings on the nights and the weekends after they finish their W-2 job because it's a chicken and egg problem. They need to make enough income in order to quit their W-2 job. But in order to do that, you need to do the first step of underwriting. And so they need fast iteration to make sure that they can underwrite really fast. Okay? If you are taking about 45 minutes to underwrite, you're gonna take forever to go through all the deals that your broker sent you. And because it's tedious work, 30 minutes of tedious work, 5 minutes of insight, they don't get into the habit of underwriting a deal. Okay. So they never really like get into the groove. Some people will do it anyway, and then they get naturally good at it and they get really pretty fast at it. But most people don't. And even when they get good at it, they still don't like the tedious work because it's almost like meaningless, like non-value add work. And some GPs, if you own a property, they also underwrite the deals they own once a quarter to see if they're on track. Like if you were to sell this right now, how much will your LPs make? So they tend to underwrite the deals they currently own. So if you own like 4 of them, usually my business partner and I will underwrite the deals once a quarter. And here I also will say my business partner and I, my real estate business partner and we underwrote more than 400 multifamily deals in our lifetime, and so we definitely have quite a bit of experience on all the terms and how things work and how things don't work. Now, because we have done so many underwritings ourselves, we know some of the kind of the small things that make underwriting unpleasant. So the first one is if you have done underwriting before, you probably will resonate with all of them, which is how do you do sensitivity analysis? What sensitivity analysis is a correlation between if you change the reversion, the exit cap rate by a little bit, how will the equity multiple work, right? So the lower the reversion cap rate, the higher the equity multiple, meaning that you're selling it at a higher price. But in order to do that, let's say you start with a 6% exit cap rate, you change it down to 5.75, you change it to 5.5, and then you measure the equity multiple. And you need to create a chart for your LP presentation. And that process takes like 5-10 minutes to just generate that chart. And it's just it's not pleasant when you're trying to raise money and you have to do that groundwork. So that's sensitivity analysis. The other thing about it is when you are underwriting multifamily or RV park or industrial, you need to find out what are the pro forma rents that you want to, put in. And you also have multiple property management companies that give you the expense pro formas. You also have multiple term sheets from multiple lenders. And so if you have two pro formas, two property management pro formas, and then two financial pro formas, all of a sudden you end up with 2 to the third power, 8 different scenarios. And it's really difficult to combine them, right? And so what most people do is that, oh, I got a term sheet from bank number 1, and then I'm gonna create I got another term sheet from bank number 2. I'm gonna duplicate the spreadsheet and I'm gonna enter the stuff for bank number 2. But what if you also have like I have a one version where I do a little bit of renovation, and then I have another version that I do like many heavy value add. And so then you all of a sudden end up with 4 different scenarios. You see what I'm saying? And then one more, if you have the property management company that's like, I think I can do this type of expenses. And then the other property management, I think the expense should be more in line with this. So you have another 2. And so you end up with 8 different combinations. we never really created 8 different spreadsheets, but we basically just have to like put that as a note on the sidebar and say, okay, if these numbers don't work, try to plug in those numbers to see if it works. That should be solved in a modern day underwriting tool. Okay. Next, if you are underwriting a specific area like Dallas, Texas, you're gonna collect a bunch of rent comps. Rent comps are what are your competitors renting for. And those rent comps right now, as far as I know, if you're using a spreadsheet, they cannot be shared among your spreadsheets, right? You just have to like find the other comps nearby. And these comps are painstakingly going to apartments.com or going to calling the brokers or pretending to be a tenant, been there, done that. And it would be nice if I can just like import a list of rent comps and then automatically fetch those rent comps because there are apartments.com and Rentometer. There are services that you can build a API integration to. Now, the next one is once you create the underwriting, you need to download the images, you know, export as a PDF so you can send it to your LPs. So the LPs were like, oh, cool, this looks good. I approve. Now I want to invest $100,000 with you. And that process right now is pretty tedious. What most people do is they will export it as a spreadsheet and then they will delete the 3 tabs that refer to the general partner compensation. Okay, that's because the GPs don't want the LPs to know like how much the GPs get compensated on that deal. But then the GP compensation affects the total returns. And so when they delete those things, they technically the math doesn't work out. Like all the numbers kind of like stop showing up. And so they have like copy and paste it into like paste as value into those sheets. And so, or they will hide the tabs as if the LPs wouldn't be able to find out like, oh, there's a hidden tab. Let me just open that hidden tab, right? And so that's a problem. Like if you feel like I'm saying things that, oh yeah, I resonate with that because I underwrote before, put something on the comment section there. Okay, let's talk about also waterfalls, right? Most of the GP split is now 80-20 split. And then there is but you can also do like a 8% pref return, then a 70-30 split, and then a 50-50 split until you reach a 15% IRR. I believe that most of the time, those waterfalls are not present in any underwriting spreadsheet, or they are not very flexible, right? What if you want to do like a general partner catch up? What if you want to do a fund of funds? So you raising money as a fund, and so there is the waterfall at the syndication level, but then there is also the waterfall at your fund level, right? If I'm speaking terms, they're like, wow, this is so complex. Like I don't understand half of what you're saying. Definitely just send me a text or message afterwards, and then we can do maybe a beginner version of like, okay, what is underwriting? What is cap rate, first of all? Okay. This call, by the way, is not so much about kind of like introduction to multifamily. Our job is not to create a mentorship program to teach people how to do multifamily. Our job is given that you know a little bit of multifamily, what is the modern day way of accelerating your workflow so that you can be more efficient? That's our goal. Okay, so it's almost like we assume that you know a lot about multifamily already or different types of underwriting, and you're looking for a more efficient way of doing things. And then lastly, I know people use certain other spreadsheets and they want to expand it to industrial, RV parks, and Airbnbs. The problem with Airbnbs is that they are renting it on a daily basis, right? Like, and then out of the whole month, on average, there are like 20 days of occupancy. Whereas a typical long-term rental, it's, you sign a 1-year lease with maybe they breaking the lease with certain probability at the end of that 12 months, and then you have a 1 month of vacancy to kind of like do the repairs and maintenance and then rent it again. So one is, 1 divided by 12, which is 8% occupancy rate, vacancy rate, and then Airbnb is more like 33 or 40% vacancy rate. Very different vacancy rate. So how do you model that, right? So all of that, it requires you to create a spreadsheet and do those scenarios. All right. So with that being said, these are the problems. Again, if you resonate with the problems, put it in the chat there, and then let me just pause for maybe about 30 seconds. Anyone can unmute yourself to ask any question you want. And before I go into kind of how we solve these problems. Mm-hmm. Okay. Also, when you asking questions, think about your questions still. The best way to demo this, by the way, is one of you, any one of you can send to this email address, perry@cashflowportal.com, a actual rent roll and an actual T12 of a particular underwriting deal that you're trying to underwrite right now. It has to be in the spreadsheet for now. PDF, we could parse it very soon, but for now, it's easier to parse a spreadsheet. So it would be great if you send it to me, and then you can just like DM me, say, hey, I send it, because it's more fun to underwrite a actual deal. But right now, I'm gonna use my sample deal, and then we go from there. But it's just more fun, more exciting if we do something that is like I've never seen before. Okay, cool. All right, any questions before I move on? Yeah, Chris. Um, I don't know how much you have underwritten so far. Anyone? Hmm?
Well, I was gonna say, so this is I'm like right in like I'm at the beginning stages, so I haven't had to make like images and charts and stuff to send to LPs, but I'm kind of in the beginning, like the grunt work of like two screens. Luckily, I have two screens. Some people I know they have iPads and they have to like switch tabs, but
Yeah.
just T12s back and forth, and then um I haven't ran into this too many times, but I know as you go more and more, just like Um, different properties, they have their T12s and stuff written differently. Sometimes they don't add them at the end. And then sometimes their things are like revenue and then rents and then utilities and then contract services. They're all over the place. So
Yeah.
just parsing it's a lot of manual work.
I love that. Yes. Yeah, that's exactly what you're seeing. Yeah. And so what we're gonna do, so maybe if you find one of them that has the Excel, send it to my email, and then we can try to parse that. Okay. All right. All right. Let's do a one that is already pre-generated. So I'm gonna add underwriting. I'm gonna do sample webinar underwriting, and then this is a $32 million price. And so we also add the whisper price as well. Okay. And then I'm gonna skip that. Now I created this deal. Everything is blank right now. Okay, everything is blank. Very good. Like all my T12, all my unit mix is blank. So the first thing is I need to generate my unit mix. There are two ways to of generate the unit mix. One way is just like you add a unit mix, and this is one bed, like one bath, right? So and then the square footage is 800. I have 50 of those units. Right now it's renting for 800, and then I'm gonna do a 50. I'm gonna create one more. This is a two bath, right? And then this is a 950 square footage. I have 40 of these units. They're renting it for 950, and I think my pro forma is 1,000. Go ahead and save. Yeah, see, that's one way to do it. And then we automatically calculate what should increase percentage and also what it should increase in number of units. That's one way. So this is kind of like the manual way unit mix. Okay, that's cool. All right. The other way is to generate it directly from your rent roll. So I'm going to go to rent roll. I'm going to upload a rent roll. You can upload the rent roll two different ways. First, one way is we give you a template, and you just like copy and paste that rent roll into this template. And if you copy and paste it, it will 100% upload. The other way, which is more experimental, is that you can ask AI to parse it for you. Okay. Now, I want to be super clear. Like, even if the AI parsing doesn't work, there are all the other benefits that you can derive by having a software that do the underwriting, specifically around sensitivity analysis, scenario planning, exporting, sharing that underwriting, and so on, and rent rolls and rent comps. So this is almost like a cherry on top. This is not the main bread and butter. Okay, so let's do AI parsing. Click on next. And I'm going to use the sample rent roll because sample rent roll is already, it looks like this. Let me go here. Let me just upload the sample rent roll here. Wait for it. Okay, there it is. So I'm going to upload this sample rent roll. And I'm going to show you kind of like what this sample rent roll looks like. Okay. The sample rent roll looks like this. Okay. This looks very much like your T12 and that the rent roll that you get from your broker, right? We anonymize the tenant name just so that people don't like, oh, we're using people's names. Okay, so this is what a sample rent roll. Okay, all right. So I'm gonna drag and drop the sample rent roll, and I'm going to upload it. Okay, and then voila, we automatically parse the entire rent roll. Again, it's more fun if you send me your rent roll so I can show you that this is not like we just make it up. It's we actually parsed it. Okay. So you can see we basically can do a pivot table of the unit types, and then we figure out the minimum rent, maximum rent, average rent, 25, median, and 75 percentile. We also do a representation of your rent roll. So unit 11D is renting is vacant. So let's go here. 11D is vacant. Indeed, it is vacant. Wow, that's 11F is 1600. That's our current rent. 11F is 1600. It is 1600. And they are moving out on March 2025. Okay. So if I go in here, I can also derive insights from the rent. So I can see what's the unit type, what's the rent, how many units each unit type has. So on the left-hand side is the rent. Okay. So this is the bar chart. This is the highest rent, this is the lowest rent, and then this is the 25 to 75 percentile rent, and then so on and so forth. This is the rent. And then on the bottom, this is how many units are there. So there you can see if I zoom in here a little bit, it says 27 out of the 29 units are occupied for my one bedrooms. You see what I'm saying? Right? Then over here, I can see 4 out of my 5 units are occupied, and the median 25 maximum. And this is very powerful visualization. Let's scroll down. I can see my leases end, right? I can see that, 22 units are going to come due on 2025 April. And so I might need to be careful about on April. I need to have quite a bit of tenant turnovers. So that's kind of cool. All right. You're not able to derive that even if you're entering it by yourself. Okay. So over here, you can see the unit mixes is automatically generated. You can see the rent is we are taking the median actual rent of each unit type. So we're saying for the one bedroom, they're renting it for $13.50. And then the pro forma rent, we are saying that we are putting the max actual rent of that unit type. Now, what does that mean? That means we're saying that if at least one of the units is renting for that much, then we have a hypothesis that most likely you can bring rest of the units up to that much. You can change it just to be clear. You can 100% change this if you want to, right? So overall, I'm looking at 11% for one bedroom, 10% increase, 14%, and the weighted average is a 12% increase on my rent. And then there's $195 per unit in terms of the absolute value of my increase. So this is how you look at this chart, right? And you can create one more unit type if you want to. You can combine them. So this is just the first pass. Once I parse the unit mix, just to be clear, the rent roll is not really that useful anymore because the rent roll is only basically help you derive the unit mix. Okay, it's only to help you derive the unit mix. It is no longer really like useful after that. Okay, so you got your unit mix. And then you can see here, I'm making a $32 million purchase. The IRR is a ridiculous 41%, which is too good to be true. So that's because we haven't put in our expenses yet. All right, so let me go to expenses. Everything is zero. All right, so here is what we are going to upload the T12 that will give you the expenses. By the way, if you have any questions, you can click on this tutorial and that will take us to a video in which I will show you kind of like the more insights on how do you use the software. Okay, let's click on upload tutorial and I'm gonna download this T12. Okay, if you're just joining, make sure that if you have time, send us a sample rent roll and a T12 and an Excel format and of the current underwriting that you're doing, and we will do a real life analysis to show you that this actually works across the board, not just on my sample spreadsheet. Okay, this is a sample T12. Looks very much like one of your T12s that you get from your property management company. You have the other income, you have the expenses, you have the legal, you have the contract services, you have the utilities, and you have kind of the property management company, and then there's the debt services and so on. Okay, right? So I'm going to drag and drop this T12 over here. Okay. If we cannot parse your T12, we will manually parse it on your behalf. And the turnaround is about 2 hours. That is a commitment that we made to you. So what you can do is at night you upload it and it's like, okay, couldn't parse it, but we will parse it by tomorrow morning. So that is because as model gets better and better, this will not become a problem like half a year from now. Okay, let me go ahead and save it. So it says this might take up to a minute because in the backend, we're actually using a lot of AI and ChatGPT to parse the expenses, right? Now, but in this case, it's already it's been parsed. Okay, so you can see all of the income gets auto-populated. Okay, this is really, really cool. All of the expenses get really get populated. And so right now I'm like looking at my contract services is $258 per unit. The utilities is about $2,900. The repairs and maintenance is about $200, and then payroll is about $1,300. This is all really good. Now you can say, Perry, I don't trust this 1.8. I don't think this is 1.8. Can you show me that this actually parses? So let's take a look at it. Total expense is actually 2.8. You're like, whoa. See, like total expense is 2.8 and you're showing me 1.8. Something happened. Like you're not accurate here. And then I'm going to show you, no, our AI is smarter than the spreadsheet that you just showed me. Why? The debt service in every T12 is part of your expenses. But when you're underwriting it, the debt service is not part of your expenses. It's part of the debt, right? So if you take this number equal to, like, and let me just take this number minus this number, and then this number is 1.8. Bingo. So we are smart enough to tell you that, hey, your total expense is not 2.8, it's 1.8 because you have to minus the debt. Okay, the mortgage does not count. Yeah, mortgage is underwritten separately. So that took us like literally a year and a half to get to this point to know like we can read your T12 and then we can build this map between your T12 and our underwriting. Furthermore, you're like, I still don't trust it. You're saying my utility is 608, but I don't know if it's 608. It is 608 right here, 608. To show you even more, if you click on, this is the most important button on the T12, by the way. This is the most important button of the software. View T12 breakdown. Once you click on it, we are showing you that your T12 section is called utilities, and the expense line item is 69110 electric. It corresponds to 69110 electric. And then 6940 trash collection and removal corresponds to this. So we are able to show you that the utilities made out of these 4 things. If you want to classify them differently, go for it. But this is as of type of a connection between our model with your spreadsheet as you want. Basically, we read your model as a tree, and we read your T12 as a tree, and we have an answer for every single line item on your T12. Okay, so that's why it's accurate. Let's suppose that, Perry, I actually don't like that. I'm gonna because one of my value adds is to actually model my utilities differently. So I'm gonna like make water a different thing. Like I'm gonna make water a different expense so that because my business plan requires me to save on water. So I'm gonna make water a conservation. Okay. So I'm gonna reduce my water expenses to 0. Okay. So one way you can do it is I'm not sure. Maybe my internet is not good here. So I'm not sure what happened here. So that shouldn't happen. But okay, cool. Okay, so that's that. Okay, let me actually refresh this page. Oh yeah. Okay, cool. Yeah. So I think can you folks hear me? Yeah, I think yeah. Because
Yeah,
there.
we can hear you. It's
Okay,
just
cool.
a little
Yeah.
robotic,
Yeah.
but
Thank you. Got it.
okay, so your cursor's moving
Yeah.
again. Okay.
My internet today, I'm actually using my regular internet. because we have some construction outside. Anyway, okay, cool. So what I can do, let me just show you an example. I'm gonna click on this utilities, and I'm going to click on water, and I'm going to move this water to other. Okay, so this $203,000, I'm gonna move it to a different category, and then I'm going to click on save. Okay. And then what it will do, it will move this $200,000 into this other category, and then of which I'm going to say, you know what, I think I can cut my water bill by 50%, so I'm gonna do the $100,000 here. Okay, so I'm gonna save that. So that's really nice. Okay, all right. I think yeah. So that's that. Cool. So you can see, and so similarly for repair and maintenance, right? Let's take a look at what your T12 repair and maintenance. Repair and maintenance is 33,000. So you can double check. Repairs and maintenance is 40,000. So like, oh, my spreadsheet is saying 30,000 and you are saying 40,000. Something is wrong. Like you don't match. You want to always click on this view T12 breakdown. Okay. And then you can say, this is maintenance related. So this is maintenance related. We classify this as repair and maintenance. And we are smart enough to know that the turnover costs is also repairs and maintenance. So you have to do, this is 33,000, and then you have to add this turnover cost. That will add you to 40,000. So you see, a lot of times when the customers are, oh, like, it doesn't match my spreadsheet, and we are telling you that, hey, the AI is actually smarter than humans, like 90% of the time. Yeah, which is really, really cool. Okay. So that's really cool, because here gives you the sources of all the line items of your T12. And so you can build, like you can verify that this 40,000 is accurate. Okay. And you can reclassify it, as I mentioned. By the way, I spent a lot of time going through this T12 parsing, but honestly, my entire underwriting has been built. This is a 17% IRR. This is a 111% return, right? This is the cash and cash 68%. And then this is my loan. And that's it. That's basically it. You can actually do the entire underwriting in less than 2 minutes. Okay. If you have your T12 and your rent roll. Okay. This is very powerful, right? All right. So now, if you have any questions, feel free to ask in the chat room there. And now I'm going to go into a little bit more advanced topics. Okay. All right. Cool. Yeah. Put it in the chat or just like raise your hand. We definitely want to make this interactive. Is this useful so far? How is this different from your current underwriting way of putting in the expenses one by one yourself? Chris, you are very engaged, so maybe you can
I'd
take
say
a crack.
there's probably a lot less room for human error.
Mm-hmm.
I know because I know we talked because I'm doing like the multifamily mindset, so they gave me like their own underwriting template, but it's still an Excel template. So, all um the stuff in the background,
Yeah.
or putting things in the wrong box can change everything, and then that one small human error can throw off everything else, and then if you don't catch it, you have to go back, and then because like I know you having your thing is like underwriting can take around 30 minutes, which is probably true, but especially in the beginning, if you don't catch things with mistakes, it can take like a lot longer just fixing your own mistakes.
Yeah. I love what you just said. And a lot of times we get these underwriting like T12s, and then like we couldn't parse it. And then the customers are, yeah, doesn't work. And then we send them an email and say, hey, the reason we couldn't parse it is that your T12 is inconsistent. Let me show you this. So we got this T12 and we said we couldn't parse it. And maybe can someone tell me why we couldn't parse it? It's because there is the cleaning maintenance expense. You have to like squint your eyes a little bit. And then there's a total cleaning maintenance expense. Like the total is this 9,537. Okay. But if you look at every month, the total here, the line item, the landscaping is 392. The cleaning is 50. How in the world did you get 1,142? Like, and then if you're not careful, you are putting in the wrong number. And so when the machine does it, it's actually telling you that, hey, your input is inconsistent. And then you have to make a choice which one you believe in. So you actually go in and correct this to be the sum of the last three numbers, right? And so this is really, really cool. Like, how did you end up with 433, 0, and 382 and become 1,733? That's not right. And so that I'm just gonna show you that like what we have discovered is that machines are usually smarter than humans looking at a spreadsheet. Okay, this is generated by a machine, and so a machine should be verifying that, hey, is your profit and loss statement even consistent? And not most of the time, 10% of the time, they are not consistent, which is which is kind of hilarious. Like we've been underwriting the wrong way most of for a long time. And I probably made the same mistake. I just told the total without realizing, hey, this is actually not correct. Yeah. All right. So I love that. All right. Let's talk about some advanced topics. Maybe people can like put it in the chat, like what you want to what you want to chat about. Because there are lots of things we can go over. One of the examples is let's go to sensitivity analysis, right? So sensitivity analysis, you can say this is based on a 6% cap rate. But if I increase my cap rate, my equity multiple will decrease. And if I reduce my cap rate, this will increase. This is generated automatically, right? And then you look at this rent roll and growth and so on. And this is the chart that you can look at. And so this is all automatically generated for you. We also have allow you to create different sections. So a lot of people, what they do is they put in here, like they say term sheets. They put in the term sheets. And then you can upload different documents for different term sheets and so on and so forth. Okay, so that's really nice. So you can upload documents. So this becomes almost a source of truth, like replace your Google Drive, if that makes sense. Okay, right. Okay, cool. So then let's go into finance. So on finance, it gets even more interesting. We allow you to put in different multiple loans. So you can have multiple loans. You may have a supplemental loan or you may have a seller finance, and we allow you to do that. Okay. Then next one is refinance. Let's say I want to refinance 3 years from now. Okay, I can do that as well. In fact, let me show you how this works. Right now, my IRR is 17% and my investor return is 111. Okay. And then this is kind of like finance without refinance. So like this is finance without refinance. Okay, I'm gonna come in here. Check this out. I can make a copy of a scenario, and then I can name this copy whatever I want. I'm gonna call this finance with refinance. So this is with refinance 3 years in 3 years. Okay, with refinance. And you're like, okay, you know what? I'm gonna refinance in 3 years, and then I'm gonna get like a very nice cap rate in 5% in 3 years, and then my LTV is 75%, and my interest rate is also 5%, and then my 3 years interest only, and my refinance cost is like 1%, and then there's go ahead and save it. Okay, nothing changes at the top. That's because you still have the without the refinance as the active scenario. To view all your active scenario, you click on this button, view active scenarios. So these are all the active scenarios that you are currently using. And then what you can do is you can make the refinance version the active. Like what happens, do you think, what happened to IRR when you refinance? IRR should increase. Like that makes sense, right? So if I click on make active, watch this, IRR jumps to 24%. Like you don't show it to your LPs that like, hey, you're like 24% IRR, like and right? You don't show it to, but you at least you get an idea that, oh, if I refinance, I can really jack out everyone's IRRs. And then if you don't do refinance, then it's 17%. This is like we use this now. Like customers and I use this now for evaluating their deals. And this is almost like a different way. It's like you've been driving a Honda Civic and then all of a sudden you get into a Tesla. You're like, oh, this is how it works now. Oh, this is really cool. Yeah, this is like you don't have to make a different spreadsheet. You don't have to like create like 5 different spreadsheets for the same deal. It parses the first one automatically for you, and then you can save this copy just in case in the future you come back to it and you can make this the active version. And you're like, oh, if I do refinance, this is what will happen, which is really nice. Okay. All right. So we have 20 minutes left. And then let's look at say expense ratio. So let me look at expense projections. Um, so this is all I'm gonna project my 3% expense ratio, right? So like I can also do, my normal expense is going to increase by 3%, and my property tax is gonna increase by 10%, and my insurance is actually gonna increase by 15%. And so what we do is we take the weighted average of your expense increase, okay? And then you can save it, okay? So you can save that. And then the modeling will change. So this is your modeling. This is the income section. This is the expense section. This is the summary. And then lastly, we want to show you is that if I go to summary, this is what the LP will see. And then you can say, what's my sample return on $100,000 investment? I can make it into 50,000. Okay, so someone want to invest 50,000 and they're like, hey, can you send me a spreadsheet or send me a PDF of like what am I gonna make? You're gonna export this summary, and then you will have your logo on it, and then you will have basically the spreadsheet that you can send it to them. You can download it and then you can send it to them like that. Okay, cool. So that's that. Let me kind of like pause there for any questions or comments.
Could you do the I'm curious about the rent comps. Can you click into that?
Yeah, absolutely.
Yeah.
So rent comps here, you can do a new rent comp, and then you can put in the rent comps and then put in city, state, and zip code. And so what we do is that we're gonna create a library of all the rent comps in the zip code. So then the next time you are underwriting something in the area, we will tell you this is the rent. What is in our roadmap? The roadmap will consist of multiple things. One of them is that we are going to integrate with a third-party rentometer, which allows you to see the nearby comps automatically. So you don't actually have to enter that yourself. It's gonna be and that's obviously the upgraded version and so on. Okay, so that's that. Oh, the last thing I totally forgot to show you is that this is something I don't think most spreadsheets exist. You can do waterfalls. So there is the non-liquidity waterfall, and then there's the refinance and sell waterfall. And so you can select the waterfall. You can say non-liquidity means you are operating it, and this is the one waterfall. But when you refinance, you have a different waterfall, and then when you sell, you have a different waterfall. That makes sense. So you can actually do it this way. Okay. And then yeah, and you can build the waterfall and so on and so forth. So if I click into say non-liquidity waterfall, you can build that. It's an 80-20 split. Okay. But if I go into the liquidity waterfall, they will get 100% of their initial capital back, and then they will do an 80-20 split. Or you can get really complex. You can say, they're gonna get an 8% cash and cash return first, and then it's a 70-30 split, and then 15% IRR, then 50-50 split. You can build that in here. Okay. All right. So there's that. Cool. All right. So that's a lot to digest. But yeah, I think that's all I want to demo, and I will take the last 15 minutes to just ask me anything. You can ask me anything about underwriting, anything you like. And if folks don't have questions, we like that's pretty much it. Mm.
I had one small thing. Are you able to post the notes from last week and this week?
Yeah, so
In
the
the
notes are going to be here. And then so there is that. Give me 1 second. The notes I'm going to make it anyone can view, and I'm gonna make a comment only, and I'm gonna copy this link, do done, and then everyone can have access to the notes.
Mhm.
Within the notes, by the way, there is the agenda schedule. So this I'm gonna call this one like a webinar schedule. Okay. Here has all the topics. So next week we're gonna talk about CRM. How do you integrate the front office and the back office? Okay, and then after that we're gonna talk about customizable funds, and then we're gonna talk about how do you raise more equity or funds in the long run, and then the next one we're gonna talk about how do you run a business. What Y Combinator taught us about being an entrepreneur. And then October, we're going to talk about a very interesting topic, which is the power of non-exponential growth. People like about exponential growth, but I like non-exponential growth. And then October 23rd is just ask me anything. Just come in and ask me questions. And then October 30th is gonna be a repeat of underwriting, but hopefully by then we have more attendees and so on and so forth. Okay, cool. All right. So yeah, so for the rest of this call, you can just ask me anything you would like. Yeah, Chris.
Sorry, I just so
Yeah.
how do we get to the notes here?
I put it in the chat, and so if you
Oh, in the
click
chat,
on
I
the
see it. Yep,
link, you should be able to see it.
there it is. Okay,
Yeah,
got it.
there it
Thank you.
is. I love it. Mhm. Yeah, very good, very good. Where is everyone from? Are you folks from mentorship group, or are you folks kind of like, I know you by definition already probably either a have an account with Casual Portal, so you have a Casual Portal account that I know, but just maybe like a quick raise your hand if you want to introduce yourself.
Well, I can
Yeah.
start. Yeah, I'll start. So I'm from Pennsylvania, near Philadelphia. Um, so I've been doing this multifamily stuff for probably 5, 6 months.
hmm
So fairly new. Um, but yeah, done single family stuff with my dad, learned that kind of stuff. But kind of trying to do multifamily, see how I like it, and then either keep doing it or maybe do more single family or just real estate. But then whatever I'm gonna do in real estate, something in real estate. Yeah.
I love that. hmm Maybe Duke and Michael, you have your camera on. So hi Duke. Mm.
Hello, can you hear me?
Yeah. Yes.
Sure. I'll give you a quick rundown. So, I'm actually, I don't, I used to deal with multifamily stuff, but I work for a company. I'm actually the head of investments for GC Realty and Development in Roselle, Illinois. So it's one of the collar counties outside of Chicago. So we're kind of by O'Hare Airport. We did multifamily stuff for a long time, and over the last 6 or 7 years, we've actually switched over to the commercial.
Um,
Um, so we do all, my specialty at this point is now industrial. My
mm,
background is actually in financial modeling. I was a option trader on interest rate futures for a couple decades first
mm,
before I got into this. Um, and how I linked up with these guys is I was actually their first investor on the LP side when they started doing multifamily stuff. And so and then they, as they got, kind of expanded, they brought me in to help kind of run the department and expand their commercial side of things because it gets really mathematically intensive because uh, the rent rolls are not as simple as multifamily stuff we're dealing with. Typically a 5-year leases with escalations. We have tax stops, insurance stops, maintenance caps. And then you got to take into account whether it's a net, double net, or triple net lease, and so things can get really intense with the math behind it as well as the modeling. So I can tell you, I built my own model, obviously in Excel. I have, I don't know, I've looked at your underwriting and obviously, we're going through cash flow portal on our current two deals. But prior to this, I was always, using my own models, kind of by hand through Excel and managing the cap tables that way. So this is actually my two deals on the table now, is the first time I'm going to use cash flow portal. The underwriting, I think it's great on the expense side for, not just everybody, but for me. But as far as the revenue side with the intricacies of the leases, it doesn't really kind of match up.
I love that. Thank you. Revenue with intricacy on the lease side. Yeah, especially for commercial. Yeah, I love that. Question for you. For your commercial, what do you use for your property management software?
We use AppFolio.
Okay, understood. Got it. Okay.
And they have an investment management software.
Yeah.
It's extremely expensive.
Yeah.
It's also a la carte.
Yeah.
One thing that's nice is, obviously it links with the property management software,
Yeah.
so
Yeah.
that does make it simple.
Yeah.
But it's no different than
Yeah.
anything else out there. It's built for multifamily stuff.
Yeah.
So a lot of like I was talking about the stops and the
Yeah.
caps for the
Yeah.
leases, we have to do that by hand.
Oh, really? Okay. Uh, so there is not like it's not like the property management software from Appfolio can do that automatically. You still have to these almost like side letters with the tenants. You have to do that by hand.
Yep.
Interesting. So you have to like build a spreadsheet of like, oh, your escalation is coming out, da da da. Like,
Well, they can do some of the simpler stuff, so they can put in the escalations.
uh-huh.
But when it comes to the stops, and if you're going to do, a triple net lease or something like that, that's when the thing just goes haywire.
Ah, I love that. Okay, cool. The reason I asked, by the way, is that we believe that we eventually we want to do property management software as well. Yeah, that's what we are breaking into next. Uh, yeah,
I would think it'd be really easy, for you guys, because like I said, it is nice that on their end that it, links
yeah.
up to the investment management software, but it's not much different. And
Mhm.
certainly you can beat them on price. Their big revenue generator is all the ACH fees.
Oh, I see.
Yeah, so they not only charge,
Yeah,
us, a door count, per, so however many doors we're paying, so much per month for each door.
yeah.
But then they charge and of course you can choose to eat it if you wanted to, but then they charge an ACH fee, which I think it's just $1, right? But it's
That
$1.
much? That's crazy. One
And then
dollar for each tenant paying a month?
every time that a check comes in.
A check. Okay, I see a check.
Or
Um,
ACH,
okay,
I'm saying check
okay.
because I'm showing my age.
I see.
But yes, when tenants pay their rent through ACH, or if they pay anything,
Yeah.
if there's a separate charge for utilities, okay, every ACH, they're taking either $1, or I think utilities, it might be like 1% or something like that.
Okay.
Because sometimes it's like an odd number, like 37 cents or something
I
like
see,
that.
see,
But
see. Yeah,
it's every single ACH that is done.
I
They're
see.
taking a cut.
Got it. Yeah.
I
Because
I use I'm doing single family now. We started using door loop, and there's also a 99 cent ACH fee on each thing, but I didn't realize that went to the software. I didn't realize, I didn't know where that went to, but okay, so that goes to the software company, the 99 cents for the
yeah,
ACH. Okay.
that's right. Yeah. That's cool. So they basically, Chris, so door loop does not charge you a monthly fee on a door count, but it charges you just an ACH fee, which is 99 cents per month. But basically it's recurring revenue because the tenants have to pay every month, that's crazy. Yeah, that's cool. I love it. This is cool. All right. Yeah. So the reason we should do it because we basically have a CRM, we basically have a document signing, and we basically has a ACH functionality that allows the LP to fund and the GPs to distribute. So like we have all the technologies. We just have to now serve the tenants and the property management companies and the GPs. So there's that. Okay, that's cool. I love it. All right. This is why, by the way, I want to have these calls just so that I can learn something from you folks as well. So appreciate it. Um, cool. I think
I
that's everything.
I
Oh,
can
go ahead.
actually add one more thing. I mean, I
Mhm.
noticed you're taking, notes like this. Have you
Yeah.
looked into Firefly notes yet?
What notes?
Firefly notes?
Firefly. So good question. So Firefly notes. There's all kinds of note-taking apps. There's like Gone. There's like Firefly.
Oh,
There's like 20 of them. Um, and the team has asked to do that for Zoom calls and Google Meets. I think we should do it. I guess I'm always a student where by typing it out, I get to register into my memory. Um, yeah, so part of me just I like to type it out so I can remember it. Yeah, yeah, yeah. But that's a good point. Yeah, we should look into that. I think
I
some of
actually
our salespeople are looking into it already. Go
I
ahead.
actually have my fireflies in here with us right now.
Oh, that's you. Oh, okay. No wonder there are two Dukes. Okay, understood.
Yes.
Yeah.
So, you know, certainly I can send you a copy of the notes if
Yeah.
you'd like to take a look at them.
Yes, yes. I would love that. Yeah. Cool. Okay. I think this is really helpful. All right, that sounds good. Cool. I think Duke, are you going to the Oak Capital conference?
No, I'm not. I can't make it.
I see, I see. I know Chris will be there, right? And yeah. Great. And then Chloe is one of our account managers. She's here also to learn more about underwriting. So
Hi, everyone.
all right, I think that's pretty much it. Thank you everyone for coming. We will always put the recording up in here. And so we'll put it here, and then we gotta continue this kind of webinar series. Yeah, this has been helpful for me. Thank you.
Okay, thank you.
All right. Thank you very much.
Nice meeting you guys.
Bye
Thanks,
bye.
Barry.